Welcome back. You're still watching Metropole Television. My name is Elijah Charles Kiage. Catch us online live at Metropole TVKE across all their social media platforms. Now, last week prices at the Mombasa tea auction fell to a 5-year low in a weekly sales as the market witnessed the value of the commodity continue to deteriorate, which led to massive withdrawal of tea during trading. A market report from East African Tea Traders Association, IATA, indicated that the price dropped to a low of 181 shillings last week, down from 187 shillings that was realized in the previous sale. Now, this saw most of the traders withdraw 20% of the tea that had been offered for sale from the auction floor, as they chose a wait-and-see approach to see if the prices will improve in next week trading sessions. Now, the price of the beverage has been declining for nearly a month now, pointing to lower earnings for farmers in the current financial year, which ended at June 30th. Good. Let's look at that trend now for this morning, just before we talk about it. And that's exactly where we are. That's in terms of tea export. Richie, just before we look at this, could you jump to those auction prices this morning? Because that's where the conversation point is coming from. So we look at that trend. And yes, that's what we're talking about. Indeed, you can see that towards Q3 of 2020, yes, we're talking about favorable auction prices. But now, if you cross over to Q1 of 2021, the conversation point is that, well, despite reducing volumes in the market, that price has been coming down. Tommy, what could be behind that disparity? That indeed, you have the volume of tea that is lower, which could favor the auction prices. But then on the flip side, you have prices in the auction that have been spiraling to a 5-year low.
The market works with supply and demand. The demand has gone down because of people's purchasing power. The purchasing power of people, the people's ability to buy tea has gone down because of the pandemic. And with time, hopefully that gets better and we can get better prices with a higher demand.
Pretty much. Let me cross over to Alexander as well this morning. Mr. Wino, yeah, if you look at how it is, that it doesn't support what we normally expect when you go into auction, because when you have a lesser volume, you expect that price to be quite favorable. But now we have a lesser volume in the market. You expect that price would be really on high, but it's not. What could be behind that trend?
Yeah, thank you, Simba. I really want us to step back from looking at this day-by-day auction price to really look at why is the tea price low. And I'll put it very simply to you, Simba. If you sell only low-priced teas, which are black teas, CTC teas, they're very low-priced, and then you add no value to it, Simba, and then you export all of it because you don't have a domestic market, and then you sell only to a few buyers because our exports are concentrated to just a few countries and a few buyers. If you do that, how can you expect a high price? I repeat, low-price product, where you add no value, and then you export all of it, and only to a few buyers. How can you long-term expect any change in the price? Notice our tea prices are between $1.50 per kilo to $2.50 per kilo for the last 50 years. Simba, for the last 50 years. Flip back, when you look at a Toyota for 50 years ago, maybe it was 100,000 in nominal terms. Today is probably 5 million in nominal terms. That is like several times more. The Kenyan farmer is still getting 1.5 to 2.5. So I really urge us to look at the wood, not the trees. Day by day, the movements are between 1.5 to 2.5. That is nothing at all. Mainly because we are selling CTC, black tea. We're exporting all of it. There's no domestic market. Only 5% is domestically sold. Only a few countries and buyers. Basically, you're looking at Pakistan, Afghanistan, Yemen, Sudan, the UK, and a bit of Egypt. Very few countries. They account for about 80% of our tea. And then you look at that concentration to a few buyers. Probably one large buyer in the UK, a few large buyers in Pakistan, Egypt, and Sudan. You cannot expect a high price.
Pretty
That's
much.
just
So,
reality.
is it something that can be corrected? I mean, when you look at the entire sector, will you say that we have been making strides towards correcting that? Because even when
Yes.
we look at exactly what is going on in the country right now, even those specific stocks are the ones that have been suffering the most on the local booze. Is it something that can be corrected, or will be making strides towards correcting?
Again, if I could just chip in, Tony, with your permission. Again, what I've said is those are long-term structural weaknesses.
Yes.
The one of exporting all your tea is structural. You don't have a domestic market. The one of no value addition is structural. You cannot change it tomorrow. You cannot
Yes.
flip a switch. The export concentration is structural. You cannot change. And I remind our listeners, our exports are going to very unstable, very volatile countries. Pakistan, Afghanistan, now the US withdrawal, Yemen, Sudan, Egypt. Egypt is stable, so it's not, but it's a small consumer. UK is not a very large consumer today. So those are structural problems. And let me close by saying a simple one to really hammer on this point.
Yes.
We also have what I call the tea sector as policy and institutional failure. I repeat, policy and institutional failure. The failure of policy is a continued lack of a domestic market,
Yes.
the continued lack of value addition, the continued export concentration. And now we have institutional failure, Simba. Do you remember something called the Tea Board of Kenya?
Yes, I do.
We kind of hid it in the basement somewhere. Do you remember the Tea Research Foundation? We tossed it into something called AFA. When you don't have the institutions to bring about turnaround of the sector or to manage the sector, you don't have the tools. You don't have the institutional tools. And the reason this is sad for me is that we are the world's largest tea exporter. Our auction is the world's premier auction. And then our KTDA is the world's largest tea marketing agency. And now, under the new tea regulations, you're dismembering KTDA into 57 pieces. You're cutting it down to size. You don't know what it is. Neither paracetamol, no, it's not. Neither paracetamol, no, it's not. In that kind of policy institutional failure, there's no way you can then address the structural factors I mentioned before. And that's what's facing the farmers. Let's look at the wood, not the trees.
Pretty much.
Back to you.
Tommy, let's jump into the next conversation point this morning, just because of time, where the Public Accounts Committee will now have to approve any government borrowing that will exceed 1 billion shillings following approval by the Parliament of the Public Accounts Committee on accounts of the national government for the 2017-2018 financial year. That's way back when they actually give these proposals. And what looks to be a tough balancing act for Ukur Yatani was already indicated that Treasury will have to borrow more to fill up the deficit in the 3.66 trillion 2021 and 2022 budget. Well, this likely meant that the amendments to the law to push up the current debt ceiling of 9 trillion to an estimated 12 trillion will be amassed. Now, members of Parliament have also put controls on how supplementary budgets, barring Treasury from presenting any such mini budgets within 2 months to adopt to the end of the financial year, which usually comes to a close on June 30th of each year. This means there will be no supplementary budgets brought before the House after April 30th of each year, with the PAC maintaining that bringing the supplementary budget too close to the main budget was disruptive to the policy direction. Good. This morning, we do know that any data that we show you around where we are in terms of who we owe, how we owe, public debt, external debt, domestic debt is always on a rising trend. And what is on a rising trend is bound to be on a rising trend, maybe from 2020 all the way up to where we are right now. Tommy, question being therefore, can the government's borrowing be capped through Parliament, going by the debt hole that the government is already in?
The debt ceiling is like a credit card limit, and Parliament controls that limit now, which is, I think, 9 million, and the government wants to raise it a little bit further. So Parliament, yes, can control this limit, can control this spending by fulfilling its oversight authority.
Yes.
But such action could be detrimental to our economy based on where we are at this point in time.
Pretty much, because that's what the question is, Tommy. If somebody asks you, because if you tell the Treasury that they can't borrow just to a certain limit, and they actually have to borrow, it's not like they have an option not to borrow. We're in a situation where we have to borrow. What do we expect to happen locally if we indeed don't borrow?
There are other ways we can find, like the supplementary budget that they passed cut spending in certain places.
Yes.
And also there is the hope that the revenue authorities can somehow shake some pockets, shake some money out loose from some people's pockets. But yeah, there are options like that, short of borrowing externally or internally without the approval of Parliament by raising the debt ceiling.
Pretty much. Let me bring in Mr. Winner this morning as well. It's the consequence that we are talking about, because it looks as if we are in a situation where we have to borrow, because if you don't borrow, then you can run your budget. Is there an option out? Because Parliament seems to be quite sure that they can cap it, that before you borrow $1 billion, you're gonna come back to us for us to give you that consent. Yes, I can come back to you and tell you, you have to give me that consent, because if you don't, then I got no money.
Yeah, again, you have mentioned a very good point, but let me put it bluntly to you.
Yes.
I like Tony's analogy of a credit card limit. Let me put it bluntly. Parliament's cap, whether it's 9 trillion, whether it's 12 trillion, has no effect at all on the Treasury. Where capping has succeeded in the world, Simba, will surprise you. Let me take you to the US, where they have almost like a daily, by the second, ticker tape of the debt. When they threaten to pass the limit, they have something called automatic spending cuts. Automatic spending cuts kick in. That is the only way to do it. In Germany as well, when they put a debt ceiling, if you're the minister and you breach it, A, automatic spending cuts can kick in, and B, there can be a motion of censure to censor the minister, and even lead to the removal of the minister. So that's what you need to do if that parliamentary debt ceiling should be taken seriously. But again, back to my earlier assertion, budget making and public finance is no longer in our hands. You must go to a certain city in Washington to then deal with your budget. It's not in your hands anymore. So we can talk about it, it's not in our hands.
Pretty much.
Anymore.
Let's move on to the last question this morning, and I'll beg that Mr. Winner, you stick around, because the Central Bank of Kenya, yes, that's the story, and Kenya's 91-day T-bills are recording the lowest interest rates below the Central Bank of Kenya's CBK base rate for the first time since March, with most analysts viewing this as an opportunity for the regulator to further ease the monetary policy. Now, the rate that fell to 6.8 6% in last week's auction might give the CBK more comfort to cut its base rate, which stood at 7% for the 9th consecutive time. Just quickly at that, Mr. Wino, and we'll be looking at it this morning. Let's jump into that data so we can look at exactly where we are in terms of CBK annual average rates, because we know they've averaged at that 7% for the 9th consecutive time. There might be fears again. We'll be talking about the 10th consecutive time when they're stuck there. Now let's look at those 91-day T-bills that we're talking about this morning in terms of the way that they've been averaging. If you can jump into the next data set, Richie, thank you very much. That's where we are. And yes, indeed, if you look up to where they are in 2019 crossing to 2020, I mean, the worst was in 2020 at 6.9%. Now is when we're talking about 6.86%, meaning lower than not CBR. We have a minute. Mr. Wino, is it possible that CBK will look at it and then say, yes, a chance for us to move away from this sweet 7 that we've been on for quite some time now?
I think the quick answer is no, they will not do it. That's a quick answer. Simba, picture this. If you're a bank,
yes,
and the CBR is, say, 2%, and the TB rate is 12%, you simply borrow from the CBK, buy T-bills, and go to the golf course. That's what you'll do. So I expect the accommodative stance or the current policy stance to remain unchanged.
Yes.
There's simply no demand, Mr. Simba, by business for money.
Yes.
Because they're seeing soft demand. They're seeing consumers don't have purchasing power. They don't need to invest in capex right now, and they're not going to really bid up any rates at all. So you'll see that soft market for a long time. But ultimately, again, back to that elephant in the room, the person or what you should be looking at today is fiscal policy. That's the side you should be looking at,
yes,
not monetary policy. This is not the sphere of stimulus,
yes,
the sphere of fiscal policy.
Yes, but in just 15 seconds, if you may, Mr. Wino, but they do have a chance, were it not for the fiscal policy that they have to remain strictly within, that they do have a chance to move away from this 7%. If you ask me, that most analysts are also saying, well, it doesn't matter, even if it's 7, 8, or 10, it still will not be effective in the economy.
Remember, your T-bill is 12%.
Yes.
If your CBR keeps going down to below 0 or towards 0, you are opening up an arbitrage gap for banks.
Yes.
Borrow from CBK, buy T-bills, go to the golf course. You still have that problem. Really, the sphere we should be looking at is fiscal policy.
Pretty much.
And the governor knows that. He
Pretty
knows
much.
that. That's why he's keeping rates unchanged.
Oof. So we do expect that is going to be around that area, and that's the prediction from Mr. Wino this morning. Thank you very much, Tommy Raindle and Mr. Wino this morning, for taking your time to speak to us here at a Metropole Television. You'll be quite invaluable, gentlemen.
Thank you.
Bye-bye.
Good morning, and that's exactly how we come to the end of the show.